Remember that Gemini Earn product that didn't do so well in early November? Well, we have more information about that. Gemini Earn was a pretty impressive product out there that people use to earn some interest on top of their digital assets. Had a decent amount of subscribers, including a lot of retail users, soaking up that 7.4% APR. But it went defunct and it has stopped paying out after the backend for it, Genesis Trading, halted withdrawals from its product itself. So we have like a lot of different products stacked on top of each other. All this stemming from the contagion of FTX, of course. Dave, I'm going to throw this one to you to untangle it and talk a little bit about the relationship with Genesis here, as that seems to be pretty pertinent.
Well, the relationship with Genesis is relatively simple. Basically, Gemini, and it gets confusing because the names sound so similar, but Gemini was bringing in retail deposits, basically giving those over to Genesis, and Genesis was engaged in lending activities to earn yield on that. Now, Genesis, we should note, is a company owned by Digital Currency Group, which is also the parent company of CoinDesk. Genesis was more conservative, I believe, than some other front ends that were using retail deposits to try and generate yield, such as Celsius, which obviously is also now defunct. But unfortunately, Genesis was hit by the defaults in entities, including, I believe they had particularly a big loan to 3 Arrows Capital. So this, as Will said, it's contagion, and Gemini customers, unfortunately, were caught at kind of the far reaches of that contagion. My one sort of meta comment here is that I think that we, as an industry, got way ahead of ourselves with these retail yield products. I think that there are still a lot of really fundamental questions about where yield comes from in crypto that is reliable. Obviously, you can generate some alpha from active trading, but that's also inherently high risk. And it's still really unclear exactly where and when sustainable profits will accrue to, for example, chains like Ethereum or any other alternative L1s in a way that would make sort of investing like this with consistent yields a sustainable product. So I think that we've learned some hard lessons here about yield in crypto and where it comes from and how reliable it is.
Yeah, I think that this is not. Yeah, I think this is not the last class action lawsuit that we're going to see. I think retail investors, customers, see what's happening in the industry, maybe don't have all of the information to make sense of how it happened. And, people want to hold someone accountable. And so this is definitely not the first one we've seen. I don't think it's the last one we're going to see. The lawsuit claims that Gemini didn't register the Earn program as assets as securities in accordance with securities law. I wonder if coming out of this bear market, we're going to see some kind of precedent set with centralized exchanges when it comes to what needs to be registered as a security or not registered as a security in the US and how that's looked at. I know Coinbase had to roll back their Earn program. I don't remember how long ago that was now because the months and years just all
feels
kind
like
of
forever.
meld together in this industry. But Coinbase had been working very closely with the SEC, and then the SEC turned around and sued them based on their Earn program. And so I think that just tells us that the regulators are not clear on what's going on here. And it shows that maybe they don't actually have retail investors, customers' best interests at hand. And so maybe we'll see some precedent coming out of this, but I can totally understand why retail investors want some answers here. Wendy?
So I was a user or customer of Gemini Earn. I don't think I left anything there, but one thing I will say about Gemini and the Earn program that they had, they were very, very clear on how it worked. They said, this is a separate entity from us. There was like little pop-ups that would come up. So it was a little bit different than using like Crypto.com or Voyager or Coinbase or any of the other platforms Crypto.com didn't go down, but any of the other platforms, like they were very, 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 very specific. But again, this goes back to regulators. Regulators are coming out calling things unregistered securities after the fact that something was launched. Gemini is very, very heavily regulated, especially coming out of New York. If you're licensed and regulated in the crypto industry and you're coming out of New York, you have to go through a lot of different procedures to be able to operate. So it's very sad that people's funds are still tied up. The good thing is that I don't believe Digital Currency Group has filed for bankruptcy, and they are looking for a solution. So, or excuse me, Genesis. So they are still looking for a solution, and hopefully that all pans out properly.
Yeah, definitely something to be paying attention to due to the class action lawsuit and the implications here with that. But I echo what Jen said. I think there's going to be more of that.